Hello and welcome back to the Without the Bank podcast. Thank you very much for being here. We are going to talk about all things IBC and how to utilize your money correctly. Today, I want to talk to my blue collar workers who are putting money into pensions and 401ks. So if you don't know, I'll let you in on a little, history of me. My husband was a union worker for 21 years, I believe it was. And the pension that he had, when he started, it was 30 and out. No big deal. Everything will be taken care of. And now their pension is completely broke. And in the last couple of weeks, I have talked to quite a few guys that are either linemen or electricians, and they have, I'm not sure that plumbers do, but a lot of your union workers, and I've had a couple of them, and you don't have a choice. If you're union, you are going to be putting money into a pension. That is just part of being union. Now, there are books written out there. Robert Kiyosaki actually wrote a book, it's one of his latest books that he co-authored with some guy that does a lot of research on pensions, and he is doing a lot of investigation of pensions and why they are broke. But let's just go back and talk about what pensions used to be. So when our parents and our grandparents, some of you really young kids, great grandparents, when they were working, they had pensions that were guaranteed. Those pensions, that money was most likely almost always put in an annuity. An annuity is basically a life insurance product that says, you know what, when you annuitize it, when you start drawing money from it, we will give you money the rest of your life. You cannot outlive it, which means they had to be funded correctly in order to do that. The insurance companies also had to actuarially look at how long people were living. And that generated how much money they needed to fund these annuities with. Today, those pensions are not put into annuities. They are put into the market. So there is no longer actuaries looking at this and saying, oh, how long are we going to live? How long are we going to retire? So when I look at my husband's pension, and we just got a letter again the other day that says, yeah, basically it's broken. There's nothing we can do. And we have had to, reduce how much money we are putting in or giving to the retirees. Stinks to be them. So sorry that you put your 30 years in and now we don't have any money to give you. Where did this money go? How was this money mismanaged? When we first got the letter that his pension was mismanaged, it was because they did not anticipate the 2008 and 2009 crisis. They also put in there that UPS bought out of that pension, and they did not expect that either. Now that I don't quite understand, because if UPS bought out that pension, that means that the union got a whole bunch of money to be bought out. They should have been able to manage that money. My friend Barry Dyke has written a couple of books and continues to do research and update information on which large companies are actually leaving the stock market with their pensions and going back into annuity type products because they want to make sure that their employees are taken care of. So when we are working for a union, we're making decent money. The railroad, those sort of jobs, we're making good money. That we don't have a choice. Teachers, we don't have a choice. That money gets put into that pension. And what happens is we as the employee assume that it is truly going to be a 30 and out and we're going to get a pension the rest of our life. That does not mean that you're going to get a pension the rest of your life. It just means there's a pension set up. How is that pension being managed? Please, 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 if you are a member of a union to where there's a pension, please look to see what's happening. Your firemen, your policemen, your teachers, your state pensions, are they being managed or not? You have pensions like California, Minnesota, Illinois. Their pensions are horrible. They are completely mismanaged. And what happens is then the taxpayers have to come in and save those pensions. So we just raise taxes on the taxpayers. Now, my husband did not work for a government agency. But at the end of the day, his union, his old union, is still hoping that the government bails them out. Well, how in the heck does the government bail you out? The government bails you out by raising taxes on the rest of us so that your pension can be made whole. What? That doesn't even make sense. But just as 401ks and IRAs are not doing anything for us at retirement, how do we expect that pension to? If you have a pension manager that can't manage a pension and make sure that you get paid until the day that you pass away, how do you think some little guy in an office called a broker is managing, and financial planner is managing your money to make sure that you have enough at retirement? These pension managers are supposed to be professionals. Are they professional thieves? I don't know. I mean, think about it. How do you have all this money coming in from all these employees and you can't manage that thing to survive? So as an employee of a union and having a pension, please do not bank on them taking care of you. You guys are going to need to take care of yourself. Start putting that money someplace else. Now, my husband's past employer said, "Oh, you know what? Our pension stinks. Sorry about that. So we are going to offer you a 401k, but we're not going to give you a match." Well, then why a 401k? I can just go put money in an IRA. What's the difference if there's no match? So now we're driving you to a 401k and an IRA, which is the stock market, the same place your pension is put. You guys, you most likely know what to do with your money better than the IRAs and the 401ks and the pension holders, right? They are playing a market. Are you wanting to start a business? Are you wanting to start buying rental properties? Are you wanting to, fix up old cars and flip cars, or what? I don't care what it is you want to do. Are you wanting to do something that is going to create more cash flow? Why be putting that money into a 401k or an IRA? It's not liquid. You don't get access to use it. And it's all at risk. Your pension is already at risk. Why would you put money in the same spot? So please, if you have a pension, if you are a blue collar worker making a decent amount of money, look at what you are doing with that money. You are getting paid well. Put it someplace that you have access to it, so down the road, if you need it, you can access it. Think about a lot of guys working construction and in businesses that get laid off in the fall. If you're getting laid off during the fall and the winter, you're going to need liquid money to live. Instead of having it in a 401k and then living on credit cards, why not save that money and put it somewhere where it's going to be liquid for you? All I'm asking is for you to think about what you are doing with that money, because you are making a fair amount of money. Are you just blowing it and spending it on toys and you have nothing saved? Well, there's a whole nother podcast on that subject. But at the end of the day, do not trust your pension when large companies right now are not even trusting their own pensions. Instead, they are pulling their pensions and putting it back into annuities or life products where they are guaranteed. Yes, they are more expensive. It is because they are guaranteed to pay out. There is not a pension that is tied to the market that's going to be guaranteed to pay out. And here's the other thing. I had a gentleman that worked for a city, and he was in charge of their pension for the department that he worked in. And they would fly to town. These pension managers would fly to town, and they would wine him and dine him and tell him what they're making for an average rate of return. Who cares about an average rate of return? What is our actual rate of return? What does that look like long term? Where are we going? What are you investing in? And they would just blow a bunch of smoke up his skirt. And if they were doing a great job, fantastic. But are we actually asking the hard questions? Whoever is in charge of managing that pension, are they asking the hard questions? Do they understand even what's being presented to them? Okay. We are not the ones managing it. We need to understand what the investments are. We need to kind of dig it apart. And as much as we don't want to do that because we're not money managers, it is your butt that's on the line. You're the one that's going to retire with or without money someday. And let me tell you, all of the people that my husband worked with, they are now getting half the benefit they used to get. And when my husband still worked there, they wanted to get rid of the pension. They wanted to get rid of the union in general. And if they got rid of the union, all the past employees would not get their pension. So once you're union, if they all work that way, it's very hard to get out of that cycle, because now you guys want to get rid of the union because you don't trust them. But what happens? All your buddies don't get their pension. And you're the bad guy. Nobody wants to be the bad guy. So here we are, still in this cycle, and we're still giving money to this pension that is completely broke, and they are admitting that they cannot fix it. Watch your pensions. Google it. Look to see what the status is of it. Once you get the letter, it's too late to reverse it. We got the letter and they were so far gone. There were no warning signs that I saw before that. Look out for yourselves. And again, they may be offering a 401k. Is that where we also want to be putting that money and tying it up? What do you want to do with life later on? Do you want to do some things today that you can't do because you don't have the money? Okay. Obviously, I don't love or hate pensions or unions. My husband's union was an absolute joke. The company basically told the union what they were going to offer them, and the union said, okay, that's what we'll take. The union leader's like, okay. Like, it was an absolute joke. There was no point for them to even have a union. But that's where they lost their pension to. At least in a 401k, you are able to decide where you want the money invested. That does not happen inside of a pension, unless I don't know all the inner workings of what that pension is. And I don't, I'll be honest, I don't. So get involved, start asking questions and start researching it and watch it diligently. We had a huge market downturn last year. If we head into another recession, those pensions are going to be hurt in a very bad way. All right, you guys, let me know if there is anything that I can answer, help with. MaryJo@withoutthebank.com. I am happy to answer any of your questions. If you have a podcast topic, please share that, and I am happy to do a podcast on it. Otherwise, you have a fantastic rest of your day, and we'll see you next week.